The Central Bank of Kenya, together with other stakeholders in the sector, are mulling over the establishment of a 100 billion shillings credit guarantee scheme to help enhance lending to the high-risk segments of the economy. This comes as questions rise as to whether the recently undertaken slashes on the policy rate are transmitting into the economy to benefit borrowers.
In its April 2020 Monetary Policy Committee meeting, the Apex Bank slashed its policy rate from 7.25% to 7%, signaling the need to enhance lending to the private sector. But with banks being increasingly risk-averse as businesses face an unfavorable operating environment, the central bank is now compelled to think outside the traditional policy so as to inject into the slowing down business environment.
There's an urgent need for some sort of credit guarantee scheme that is correctly structured so there is less moral hazard to ensure that the SMEs can actually borrow at rates that are not at rates that are affordable.
The Central Bank of Kenya governor says that it is important that Kenyans appreciate loan restructuring in light of COVID-19, which is being taken on a case-by-case basis.
You have to present yourself to your bank and then have that discussion, explain how you are affected by the pandemic, and then the rest you can work out a relationship or an outcome that both the bank and yourself are satisfied with.
In its third meeting of 2020, the CBK slashed rates yet again, placing the benchmark rate at 7%.
The MPC decided to reduce the CBR rate, also as a signal to all of us how big this thing is.
In the last 12 months preceding March 2020, growth in the private sector had increased tremendously, with the manufacturing sector and building and construction leading. This was supported by the lowering of the lending rate by commercial banks in response to the reduction in the CBR.
The impact of a reduction by 100 basis points by 1 percentage point, the CBR, that takes time, but that is working.
CBK now projects that the economy is expected to grow at 2.3% this year, but with the prospects of COVID-19 easing by the year end, 2021 is set to rebound with a growth of 6.4%. Lilian Kiarie, NTV.